Green, DC editor, and I am really excited to be speaking today with Robert Kirkland the second. Should I say the second, Rob?
I mean, definitely is my legal, but Rob is fine. Rob Kirkland is fine.
Okay. Well, Rob is what we'll say, but he is currently the senior home lending advisor for JP Morgan Chase, and he is supporting the firm's local expansion into the DC metropolitan region. He has over 16 years of experience in residential mortgage lending, and since joining the firm, he has been tasked to expand its low to moderate lending activities and community outreach. As part of the initial expansion, he will be supporting the retail bank branches located in Wards 7 and 8 in the District of Columbia, which we talk a lot on Afro Live, I'm sure, as you guys know, about Wards 7 and 8, how they are critical and very quite important, of course, to DC's overall culture and fabric, but doesn't necessarily sometimes get the love that we hope and appreciate. So I'm really, really excited because I know Rob is going to get into what he has learned about the things needed in Wards 7 and 8, where there's a lot of disparities. It's a food desert. It is an economic desert. It's a health desert. And so we're going to talk about that as well. But you guys know the drill. Before we get into the combo, we got to share the stream. So let's do that. And while we're doing that, Rob, tell me how you're doing. Like, people, I think, forget that we're still in the middle of a pandemic. You know, how are you feeling? How are you doing today?
I'm extremely blessed. Last year was very unique for all of us, trying to adapt to just how we do business, how we interact with our friends and family. And so I'm super interested and excited to kind of get back to a more normal lifestyle. I had my COVID test or COVID shot the other day. And so we'll kind of see how that progresses with my second shot, but definitely looking to kind of get back into the flow of engaging with friends and family and just really getting back to what we were used to doing. But overall, God has blessed me really well. I've been able to kind of weather this storm and really come out on the positive side.
Well, that is really exciting. And it's so awesome, I think, to hear optimistic tales during this time. To hear that you've weathered this storm, I think is the perfect phrase for what we're all experiencing right now. And just the fact that we can be here and talk and have a conversation means we've weathered this storm. So I want, I guess, to dive right on in. I gave you guys a bit of an idea of who Rob is and what he does as a senior home lending advisor for JP Morgan and Chase. But what does that really mean? And why do they need you, Rob? And I guess, any person, but you are filling that role to help in terms of expanding JP Morgan Chase's reach here in the DC region and in Ward 7 and 8.
Yeah, absolutely. I mean, the question is very fair because the title is long and it doesn't always cut right to it. And so if you understand our industry, you understand that you work with professionals to help you buy your home. Too often and not regularly do we tend to buy a house in cash. And so if you're looking to buy your home, you need someone to help you secure those funds. And so my role with the firm is I am an advisor, an advocate, a supporter of our core customers. I help them identify their goals, reach their financial capabilities, and allow them to take advantage of funds to help them buy their property. So I am, in essence, a loan officer. The firm calls us advisors, but I'm a loan officer that supports clients in their attempts to procure property.
Well, it sounds cool, though. I like the title advisor, I guess, versus officer. One, because we know, particularly in the Black community, the word officer kind of chills us in a way sometimes. But I also think in the sense of it sounds like you are doing a great deal of advising, of helping people understand how to spend their money and how to access funds in order to buy a house. So first of all, what is the climate right now in the DMV, and particularly in Ward 7 and 8, for people even interested in purchasing a house and your services right now?
Yeah, absolutely. So Chase is very intentional about the use of our taglines or our titles because, again, we're more than people who push your paper forward.
Yeah.
We are designed to be your helper, someone that's an advocate. And so, yes, as an advisor, I play multiple roles within that. I help individuals take advantage of the one goal, which is to buy the home. But we're oftentimes, especially in those communities of color in areas like Ward 7 and 8, we're helping them long term to not only be able to take advantage of the home buying process, but to help them understand their credit, help them understand how to budget, really be a supporter with them as they're beginning to start their banking relationship. And so it's multiple hats under one stream, and that's why the advisor role really is more keen to what we do versus just being a loan officer. The loan officer is just doing one function. And what we try to do with Chase, especially within our communities, is to really be holistically approaching the customer and helping them understand all the different layers that we can support their financial capabilities.
And so when you're talking about an area, I guess like Ward 7 and 8 and financial capabilities, we know DC, anywhere it's expensive to buy a house. And so, you have programs like that Chase has and offers in order to help people learn how to buy a house and access funds in order to do that. Can you tell us a little bit about some of the programming that you guys offer and why it can be beneficial to places like in Ward 7 and 8 in DC?
Yeah, absolutely. So we've identified that one of the major barriers in home ownership is going to be the individual's capability of covering what we call a down payment. That is a percentage of money that you're required to put toward the transaction. And so what we find with a lot of first time and new home buyers is that if we can help them with that gap of down payment assistance, they're more likely to be able to accomplish their goal, which is to become a homeowner. And so with Chase, we have a multitude of products and services that are designed specifically to kind of bridge that inequity or that gap for them. And so late last year, Chase created or identified a path forward for communities throughout the DMV, specifically those communities of color, where we're looking to reinvest over $8 billion within the next 5 years to help make home ownership more affordable and sustainable for those communities. We identified that within the DMV region, there's about 187 communities that will be able to capture this. And how we're going to deploy this $8 billion over the 5 year span is going to be utilized in a form of a down payment assistance grant. And so we're really providing clients and individuals down payment assistance up to $5,000 to help them with that down payment. And so in these markets like Ward 7 and 8, where home prices are skyrocketing higher than what you can even imagine, we are seeing that a lot of our customers are finding their incomes to go up a little bit within the DMV, but still with the higher price of the home, the issue isn't a matter of can I afford the mortgage payment, it's can I afford the down payment. And so what Chase is looking to do is to help them with that increased responsibility. And we're doing that in the form of a grant that is fully forgivable, in which case, once the client decides to utilize our services, they'll get those funds to help them cover that down payment.
Wow, that is amazing. Look, I'm taking all the notes, even for myself personally, because I feel like people don't know that these programs, that these funds even exist. How are you guys able to get to the community to make them aware of you? I know that your job in particular, as I read in your bio, is to focus on expansion in the DMV in Ward 7 and 8. How are you guys getting to the community?
Yeah, so we have several branch locations within the community, the heart and center of the community, where we have an open door policy where clients typically come in and we conduct seminars and or what we call Chase chats, where we break out different topics throughout the week and we discuss them with the clients as they come in. So that's one function of how we tend to do our community outreach. But specifically with me, my core business has been designed around financial literacy. And so throughout the year, I typically teach home buyer workshops, in which case I actually had a class this morning that I taught a class to a group of individuals where I broke down for them the way in which they can buy their home in the midst of a pandemic. That's kind of how we phrased it. And we showed them how they can improve their credit, increase their financial capabilities within their budgeting. And we kind of just went over all the pros and cons of just being a homeowner. But really what we do is we typically work through the community, work with agencies that are already doing the work. So we provide financial capacity resources to these local nonprofits to enhance their mission. And through that, we are able to get our message spread to a wider audience.
And you talked about in the class that you talked about the pros and cons of being a homeowner. I hear all the time that DC is a buyer's market, is a homeowner's market, excuse me. What does that mean? And is that true? And what are the pros and cons of being a homeowner in the DC region?
Yeah, absolutely. I mean, one of the great things about home ownership is what we all should look for, which is that appreciation of equity, which in turn helps you create generational wealth. So that's really why a lot of individuals seek to buy. It isn't always for what you get today, but what you can have for the future. And so the pro for ownership, especially in the DMV, where we have seen home prices continue to rise, is that opportunity to create wealth. Individuals who bought homes perhaps in the early 2000s, let's say around 2010, those individuals are seeing hundreds of thousands of dollars worth of equity appreciation from a home they bought just 10 years ago. And so that by itself puts individuals, communities into a different classification when they're thinking about planning for their retirement, planning for their future, planning for their legacy. And so the number one pro for buying, especially in DC, is going to be the appreciation. Now, there's a lot of cons. And again, I'm a really big home ownership advocate, but I'm also really big on the notion that it needs to make sense for the person. A lot of individuals like myself, young professionals, we saw what the 2008, the 2007 did for a lot of communities of colors, especially people that you may even know. And so looking at that, I know the importance of why you should buy, but I recognize that everyone is at different stages. So you should buy when you're ready. And that's kind of why we lead with education, because we really help customers understand what they're capable of doing. And through that deep dive and self-reflection, they can make the determination of whether or not it's the right time. But again, if you can get in early, get in with the good price, especially in DC, there is a lot of upside for an individual when you think about 10 to 15 years down the line.
All right, y'all, you are hearing from the senior, all right, lending advisor, JP Morgan Chase. Great information. Thank you, Robert. Going back to, and again, you need to sign up for the classes, y'all, if you want to get all this good, juicy knowledge that he's providing. So don't give us all the goods. But I also thought it was really important that you said in the class, you talk about buying during a pandemic. People have been really hard hit in so many ways. And so does it make sense to purchase during a pandemic? And what are some of the things that you teach and offer as ways, if it does make sense for the individual to do so?
Yeah, absolutely. So on our call this morning, we discussed that buying a home is a two-way street. You have the customer and you have the institution lending the money. And so both individuals or both entities are looking at the risk on both sides. The banks are going to be analyzing the risk factor of the customer. The customer needs to analyze the risk of just buying in the pandemic. And so what I encourage individuals to do is to really hone into your financial profile. Again, we've said this multiple times already, but the budgeting aspect is key, because in the midst of the pandemic, there's a lot of unforeseen expenses that come up that we probably weren't planning for, right? And so what I try to encourage clients to do is to really think about having, a set aside money just in case there's a rainy day. Things that we wouldn't really have to consider years ago when you were buying a home. Typically, clients will buy a home, they'll buy the home with their funds, and then that was it. And so the goal was manage the payment every single month. But now you have to really consider, even though you can afford to pay the mortgage, do you have any money set aside in case we do find ourselves in a pandemic that we were in. And so the biggest piece of the difference between 2018 to 2020 is going to be how well we're planning for the unknown. And banks now are asking for you to have those unknown funds set aside ahead of time, whereas before you wouldn't really need to do that. And so I really think it's just more so honing into, individuals' capabilities and identifying, well, how can we get through a hardship that we're in now and still find ourselves on the other end? Because home ownership is not a matter of just buying, it's retaining and keeping. And so again, the hardest hit community that we saw in 2007-8 was the African American community. We lost a ton of wealth appreciation during that time. And a lot of that is because we were perhaps not given the right information to make the right decision.
Wow. I mean, I am learning so much, and I'm really appreciative that you are comparing where we are now to where we were in 2008. Obviously, a lot has changed, but a lot has stayed the same. And I think preparedness is a key point that I'm taking away from this, and I'm sure our readers. We're about at the dang, wow, a little bit over the halfway point. I could talk all day to Rob, guys. Aren't you learning so much? Please throw your questions, your comments, anything that you may want to bounce off of Rob in our chats, in the comments, and I'll try to get to it. And again, thank you for tuning in. And remember, go ahead and share this stream. Sharing is caring, and this is such an important conversation for our community. So we definitely want to make sure that you go ahead and share this stream. So Rob, you talked to us about the importance of prep, having a rainy day fund in place. Again, I know that every individual is different. Everyone's finances are different, but take the first time home owner in DC who may still have student or first time home buyer. They have not purchased a home yet. They may still have student loans. They are not a millionaire by any means. What would their first steps be in order to prepare to purchase a house?
Yeah, absolutely. What I would say to anyone who is interested in the idea of ownership, there's a lot of different ways in which you can get to that goal. But I always tell clients, start with understanding your credit, because credit is a big driver. Credit will open and shut doors for you in a heartbeat. And so I always think about this commercial where the young lady walks into the car dealership, she kicks her feet up because she knows she has great credit, right? And so that gives you a sense of power and authority when you are engaging with the financial company. So I would say start there. Know your credit score. Know what really makes up that credit score. Are you paying your bills on time? Are you managing your credit card, the utilization? These are the things that are going to have the greatest impact to the score. And so the first starting point is doing that self-assessment of yourself, pulling your credit. As a consumer, you can get your credit report pulled for free every single year from annualcreditreport.com, www.annualcreditreport.com. In addition to that, here at Chase, we do offer a credit monitoring or support service called Credit Journey, which you can look that up via any Google search, creditjourney.com. And so these are ways in which you can really take ownership of just your profile. But once you've identified your score and where you are financially as it relates to the credit, I would say visit one of those classes we talked about. There are a ton of HUD, which is the Housing Urban Development, HUD-approved counseling agencies throughout each individual city and state. Take advantage of those free resources. These organizations are designed to be there to support you in your mission towards homeownership. And so, again, I'm very big on getting the information early and often. And so knowing your credit, going to these courses, getting the fundamentals in place, that is kind of where you identify your baseline, before you then go talk to a banker.
Y'all, this is such a wealth of knowledge. Thank you so much, Rob. I am learning so much right now. And then again, guys, I thank you for all those who are tuning in. But go ahead and throw some comments and questions. And I really appreciate all those. Hey, Jewel, I saw you in the comments earlier. We appreciate you tuning in. Thank you, Eric, as well, for tuning in, and Dana. We really appreciate that. But if you have any questions for Rob, go ahead and throw it in the chat. Rob, what's one of the things that you um, feel like the African American community in particular needs to know about home ownership? And we can, even go as specific as the Washington D.C. region. We have people tuning in from all over right now, and so I think it's really important um, for Black people to know about home ownership and why it's important to us as a people. Can you share a little bit about that?
Yeah, I would say one of the most important things to understand is to really shift the conversation from what we are taught as, okay, this is your home, you're going to live in this home for 10, 15, 20 years, the whole white picket fence idea, correct? And so what I try to tell individuals is that your home purchase, your first home purchase, should meet you where you are in your life and your finances. And so know that if you're just getting started in your career, but you know you want to be a homeowner, buy a home that's affordable, something that you can work your way into. Because home ownership, just because you buy your first home doesn't necessarily mean you won't be able to buy it once again. I remember when I was 23, I purchased my first home, and that first home is now my first investment property. I was able to utilize the resources around me to capture a home that was affordable, and it allowed me to grow into that. Now, married with 2 kids, I needed bigger space, more space. And so I was able to parlay that one investment to a stream of opportunity for me where not only did I get the appreciation that we talked about earlier, but now I'm earning income on that property. And so I think for our community, we really need to really think about the messaging and what it is told to us historically that you should be buying a home and that you need to live in that home for 10, 15, 20 years. Once we really break that down and identify that a home is nothing more than a large investment opportunity, it's a way in which you can create wealth. And when you think about it in the same context that you look at your 401k, you look at your money market accounts, you don't see those as long-term, plays. You see them as stepping stones, ways in which you can build. And so the way in which you more likely won't be with the same company for 20, 30 years like our parents were, same thing with the house. You can buy your first home, transition that home, and then buy your second and third home. I have a lot of clients that are relocating, moving out of the area. And so they're now renting out their property here in the district and then now buying their next home, let's say in Atlanta, which is a very hot market right now. And so if you approach buying and you waited until you were perfect, when you were settled in, family, then you might be missing an opportunity that a lot of other communities are taking advantage with now because they're thinking about it as what is the right now opportunity for me and how can I benefit from buying today and what would it look like 10 years from now?
Wow. Thank you, Robert. So, as Rob said, guys, don't miss out on these opportunities. Check your credit, know your credit, and then go ahead and talk to people and get the education from people like Rob and these classes like Chase is offering to make your dreams come true in home ownership. I believe, and fact check me, Rob, but isn't it called the Dreammaker mortgage? Is that correct?
Yeah, so we have a really, really phenomenal low down payment mortgage program. And we say low down payment because we have reduced that barrier to make it very, very affordable for customers to buy their first home or their primary home. And so, yes, Chase's Dreammaker program is designed to help customers when they are looking to buy that new home. We have down payments, meaning the amount of money that you're responsible for within a transaction. You can buy with our program with as little as 3%, which is one of the lowest requirements in the industry. And so with that, we also have lower requirements for credit. So our credit score requirement for this particular program is as low as 620. Now we know that when you're buying your home for the first time, the stronger your profile, the more options you will get, right? And so even though we offer the program with as little as 3% down and 620 credit score, doesn't mean that you cannot come in with higher profiles, because we understand that the higher your profile, the better your rate's going to be, the better your terms are going to be. But we have these programs at these tiers because we want to encompass a wider group of individuals. And so, yes, with our Chase Dreammaker, it expands itself to allowing new home buyers, first-time home buyers, a chance to buy with very little to no money out of pocket.
And you talked about the fact that you were 23 when you purchased your first home, which is a dream again for many people. And in your bio, it says that you're passionate about making young adults home owners. Can you talk a little bit about the place that we're in now, where millennials often complain, right, about not making as much as their parents, not having the opportunities that their parents had to purchase homes? And can you sort of help reframe that narrative and give us some encouragement about young adults and home ownership?
Yeah, it's kind of what we talked about when it comes to, meeting your home within your current position. So I have a lot of clients that enter into the housing market with the concept of what you typically hear on social media called house hacking. It's a concept where you can buy a piece of property. Let's say you buy a home that is considered a 2-unit property, meaning you live in one unit and you can rent out the other unit. And so with our programs, you can utilize a lot of our down payment assistance for properties that are not the traditional single family home, white picket fence. And so think about someone buying, let's say in Baltimore City, and they decide to buy a 2-unit property. That 2-unit property could cost them anywhere between $200,000 and $300,000. But what they're doing now is they're going to live in one property, one of the units, and rent out the other. And so in some cases, the rent that they receive from the other unit allows them to afford that home, whether it's rent-free or very reduced mortgage. And so again, even though we are perhaps making less than our predecessors, there are many ways in which you can approach housing to allow yourself to afford the property, i.e. the concept of house hacking has taken really a hold of the community that we typically work with, because it's a phenomenon or concept that we can really get behind. Who would love to live in one unit and have their neighbor or their tenant pay their mortgage for them? I know I would.
That sounds fabulous. And what is your advising policies about people who want to purchase a house and then use another unit or a separate space, for example, for something like Airbnb or home sharing in that way?
Yeah, well, I mean, obviously, you want to make sure that you are compliant with the federal and local rules when it comes to Airbnb. They're being more lax. And so I know a lot of individuals, especially in the areas like within the city where they have their main unit and then they have an accessory unit where they're renting out. And so here with Chase, we look at the big picture. Can the customer afford the opportunity at hand? Okay. And so if they are going to buy this piece of property, do they have the income, credit, and assets to buy? If they're going to use rental income out of the property, do they have a tenant already aligned, signed up for it? And so for us, we don't really have a lot of concerns with the notion of what you decide to do with that property in the future. Our goal is to ensure that you're capable of affording the home and you're making a good decision financially.
Can you afford the home? And if so, go for it, y'all. That is what Rob is saying. Again, I've learned so much. Know your credit, understand your credit, and go ahead and check out these programmings and these websites that allow your credit report to get to be right there in front of you. Of course, Rob talked about Chase's credit journey program, and then there's also www.annualcreditreport.com, and both of them we have in the comments, so go ahead and check that out. Rob, is there anything that we haven't talked about today that you think that people should know before we wrap?
Well, yeah, I want the community and everyone to know that Chase is making massive expansion throughout the country. You know, we committed a big portion of reinvestment into underserved communities where we're trying to bridge that wealth inequity and that racial wealth gap. And so, what I want everyone to know is that, you know, when you make the decision to attack and to become a homeowner, you want to talk to your professional, talk to your banker, because what we do is designed to support you big picture. And so moving forward, the information is out there, but you want to start with your trusted advisor, because sometimes too much information could be a staller for us. And so again, everyone who's listening, definitely feel free to reach out to us if there's anything we can do to help you with your goals.
Thank you so much, Rob. I've learned so much. And it's funny because I was thinking before this, I should have my pen and paper out ready to go. And that's exactly what happened. Rob, how can the people keep in touch with you, keep in touch and understand and be informed about Chase's products, services, and programming available, and particularly these classes and info sessions?
Yeah, absolutely. So you can always visit chase.com as your main source to your starting point. From there, there are going to be multiple ways in which you can find local representation. Because we're being broadcast nationally, it's definitely want to make sure that you find a local partner with you who can help you understand your community that you're looking to purchase in. And really, that's really where you should start from. As far as identifying resources for home ownership related to the counseling, if you visit HUD.gov, that is a really good source where you can start there. They will ask you to put in your city, state, and zip code. And from there, you can identify all of the nonprofits, HUD-approved nonprofits that are within your community. And that is another great starting point to really get the ball rolling from a third-party institution designed to really solely focus on your financial capabilities.
Thank you so much, Rob. Again, I cannot emphasize enough how much information you've given us today. You are a wealth of knowledge, and that's exactly why you are the senior lending advisor. And as he said, Chase is very intentional about their words, and there's so much advising that Robert is able to provide for all of us through this. So again, as I said, sharing is caring. Share this stream. It'll be here forever as long as Facebook exists or as long as you exist. So make sure you share this stream with your people. There's a lot of folks who I know can benefit from this conversation and learning how they can access help and funds and opportunities to get that first home. Thank you so much, Rob. I really appreciate your time today.
All right. Have a great day.
You too.
Bye.
Bye-bye.